1 digit, 1 transposed character in an IBAN. 30,000 euros sent to a stranger under old rules, nearly impossible to recover. Under PSR's Verification of Payee requirement, that payment should never have left. PSR, the Payment Services Regulation, mandates verification of payee for credit transfers across the EU. It is a name check. Before money leaves, the payee's name must be checked against the account identifier. If they do not match, the PSP must warn the payer or refuse the payment. But verification of payee is not magic. How you design the matching algorithm, what you do with the result, and how your UX presents warnings. Those design decisions will determine whether VoP kills app scams or just teaches fraudsters a new evasion technique. If you own fraud models, design payment UX, build transaction monitoring, or manage PSR compliance, the details of how you implement VOP will directly affect your liability exposure, your fraud loss rates, and your supervisory evidence base. This episode is the implementation guide. Payments and fraud professionals, have you had the internal debate about how strict your VOP matching algorithm should be? Exact match, fuzzy match, or something more nuanced? Drop your approach in the comments. This is one of the most consequential design decisions in PSR implementation, and teams are arriving at very different answers. Verification of payee is a prepayment name check. When you initiate a credit transfer, you enter a payee name and an account number, the IBAN. VOP checks whether the name you entered matches the name registered to that IBAN. The outcome can be a match, a close match, or a mismatch. Each outcome triggers different required responses from the PSP. PSR applies VOC requirements to credit transfers, particularly relevant for SEPA credit transfers and SEPA instant payments. The precise scope and any exemptions will be further defined in regulatory technical standards, but the direction is clear. For mainstream bank-to-bank credit transfers, VOC will be required. The more you depend on these payment types, the more central VOC becomes to your fraud architecture. There is a tension built into VOP that you need to design around. Instant payments are supposed to settle in under 10 seconds. VOP adds a name check step before the payment is initiated. Done well, this check happens in real time, milliseconds, without meaningfully slowing the customer experience. Done badly, it creates delays that frustrate customers and drive them to override warnings just to move things faster. The most immediate fraud reduction benefit of VOP is on misdirected payments, where a customer genuinely enters the wrong IBAN. This happens through typos, outdated contact details, or fraudulent IBANs sent via phishing messages. VOP catches the mismatch at the point of entry before any money moves. This is where VOP delivers the clearest and most defensible value. For app scams, VOP's impact is more nuanced. If a scammer controls an account under the name Investment Holdings UK Limited, but the scam involves a victim sending money to Secure Investment Partners Ltd, VOP will flag the mismatch. But if the scammer has registered a company with exactly the right-sounding name, VOP may match and the fraud still proceeds. VOP reduces risk but does not eliminate it. Here is a dimension of VOP that is often overlooked in implementation planning. VOP outcomes are rich signals for fraud and AML analytics. A customer receiving a mismatch warning and overriding it is a data point. Multiple customers receiving mismatch warnings for the same payee IBAN is a network signal. Repeated mismatch patterns from the same device or IP address is a behavioral red flag. VOP turns every name check into an intelligence event. The operational implication is that VOP cannot sit in isolation from your fraud engine. When a payment combines a VOP mismatch with a new device, a high value, and a new payee, your real-time decisioning engine should be able to escalate that combination to a fraud review, not just display a generic warning and let the customer proceed. The first major design decision is your matching algorithm. Exact matching is the most precise, but it generates the most false positives if the account is registered as John A. Smith, but the payer enters John Smith. An exact match system flags a mismatch. This creates friction for legitimate payments and will cause customers to distrust and override VOP warnings. Not ideal. Fuzzy matching allows for minor variations, common abbreviations, spelling differences, company name suffixes. It reduces false positives and makes VOP more usable. But it widens the zone where a scammer's carefully chosen account name can slip through as a close match instead of a hard mismatch. You need to define where your close match boundary sits and document why. There are matching challenges that no single algorithm solves perfectly. Joint accounts where the payer only knows one account holder's name. Trading as names where a sole trader's registered name differs from their business name. Multilingual name variations, names with diacritics, accents, and special characters that may be stored differently in different banking systems. Each of these needs a policy decision and a documented exception process. Warning quality is where most VOP implementations will fail or succeed. A vague, low-prominence warning, "We could not fully verify the payee name" in small gray text, is easy to dismiss and provides almost no fraud protection. A specific prominent warning that explains what mismatch means, why it matters, and what action to take. That is what PSR expects and what supervisors will evaluate. PSR requires PSPs to refuse in cases of significant mismatch. For close matches or minor discrepancies, a warning plus the ability to proceed is appropriate. Your policy needs to define: at what match score does a warning become mandatory? At what level does an outright refusal apply? And when does a mismatch plus other high-risk signals trigger step-up authentication rather than just a warning screen? Every override of a VOP warning must be logged. What warning was shown? What the customer confirmed? When it happened, what the mismatch score was. This is not optional housekeeping. It is your liability evidence. If a PSR liability dispute arises from a payment where the customer overrode a warning, your case depends entirely on what your system recorded at that moment. Case 1. A customer types an IBAN from a paper invoice, transposing one digit. VOP checks the name, it does not match. The system shows a warning and pauses the payment. In this scenario, VOP works exactly as intended. The customer checks, realizes the typo, corrects it, and the payment goes through. No fraud, no loss, and no liability for the PSP. This is the straightforward win. Case 2. An app scam where the mule account name does not match the beneficiary name the customer was given by the scammer. Your VOP system flags a mismatch, but the scammer, who anticipated this, is on the phone telling the customer to ignore the warning, claiming it is a system error. The customer overrides. Payment proceeds, funds are lost. Under PSR, what you did after the mismatch warning will determine your liability position. If your system showed a specific prominent warning, the override was logged, and the combination of mismatch plus high value did not trigger any additional friction, supervisors will ask why. The argument that the customer overrode the warning becomes stronger if you can show that the warning was genuinely difficult to dismiss. A single proceed anyway click is not sufficient. Case 3. A close match false positive. A sole trader's account is registered under their legal name, but their invoice uses their trading name. A legitimate customer enters the trading name. VOP returns a close match. The customer sees an amber warning and gets confused. They may call the payee to verify, creating friction and delay, or they may abandon the payment entirely. This is the false positive problem that damages trust in VOP. Here is a question for those deep in implementation. What is your biggest VOP design challenge right now? Matching algorithm accuracy, warning UX that customers actually read, or feeding VOP signals into your real-time fraud engine? I want to hear the specifics. Comment below and let us build a practical knowledge base around this. Customer education is not optional. If customers do not understand what VOP warnings mean, they will either ignore all of them, making VOP worthless, or they will panic at every close match result, driving support calls and payment abandonment. A proactive communications program explaining what warnings mean, what to do, and why name checks protect them is a direct fraud prevention investment. Who owns VOP? This question is causing genuine confusion in most institutions. The answer is everyone and therefore nobody, unless you define it explicitly. The matching algorithm is IT and product. The fraud signal integration is fraud. The AML signal integration is AML. The UX is customer experience. The legal exposure is legal and compliance. Someone needs to own the end-to-end design and the evidence documentation. Define it before you build it. Whatever VOP design you choose, document the rationale. Why did you choose fuzzy over exact matching? What false positive rate did you test against? What does your warning look like and why is that language appropriate? What does your override log capture supervisors? And internal auditors will review these decisions. The documentation you write now is the defense you will rely on later. I have a VOP implementation guide at daveinsidediligence.com covering matching algorithm options, warning UX examples, and how to integrate VOP signals into your fraud and AML analytics. Link is in the description. The full series is also on Spotify, DaVinci Diligence if you want the audio version on the go. If this episode helped clarify how verification of payee works in practice and what implementation actually demands, subscribe for episode 4. That one covers the platform and advertiser provisions of PSR, how online platforms can be held liable for scam content, and how your fraud team should build the cooperation and evidence processes to use those provisions. Share this with your payments, product, and AML colleagues. See you in episode 4.